A lot of people are out looking for acquisitions these days, and one of them for the last several years is Ken Assiran. He's the managing principal of Capital Health Group. Tell me a little bit about Capital Health, when you got started and when you did your first acquisition.
Sure. We started the company in October of 2006. Of course, I'd been in the industry for a long time, and we did our first acquisition in April of 2007.
2007. So how many properties do you guys now own?
We now own 15 properties. Over the past year, we've divested 4 properties. So we had 19 properties, and now we own 15.
And you manage all 15 of those?
No, we don't. We started a management company in 2011, and we manage 5 properties now. And we'll continue. All our new acquisitions we will manage.
Will be managed. Do you have any agreement with the other managers to sometime take over the management after a certain contract expires, or that's something you don't want to do?
Well, we respect all the contracts we have with our existing managers, and we, as long as they're doing a good job, which I expect they will, we'll keep them in place.
And what's your breakdown between assisted living and skilled nursing?
We actually don't own any skilled nursing. We manage one building that's half skilled nursing and half assisted living in California.
And in your acquisitions, have they been mostly on the distressed side, semi-distressed, or turnaround, or just if it makes sense?
I would say most of our acquisitions, if not all of them, have been value-added plays. Some of them have been distressed assets. We've bought distressed debt and then basically foreclosed on the real estate and now own the real estate. We've bought buildings that have been underperforming and improved the performance. We've bought buildings that are in great shape where we wanted to increase the capacity or the size of the buildings by adding additions. And we've built new. So we do a lot of things. We like to do distressed deals. There's only so many that work and that we're interested in, but we've done quite a few. We'll continue to work in the distressed area, but that's only part of the programmatic approach that we take to acquisitions.
And in the turnaround distressed area, how long does it usually take you to bring them up to the level where you're happy? And then what's the hardest part you find about turning them around?
They're all different. They all have different issues. But I would say in general it takes about 2 years to turn a building around. Buildings, when you buy distressed assets, there's a certain stigma that comes along with the asset of generally problems. And I think you have to change the image of the properties, and I'd say it takes a couple of years to do that, to fully stabilize the asset and get beyond the stigma that you buy it with.
Is the exterior image the hardest thing to change, or the interior culture?
I think it's the culture of the building and the issues that created the distress. You have to first fix those, and then you have to work on a new image in the community.
Right. And how do you typically finance your acquisitions and development?
Sure. Traditionally, we've used our own equity plus different partners that we've worked with at different times through our growth cycle. However, just recently, we've entered into a long-term joint venture with Hunt Realty Investors, and that will be a long-term programmatic equity investor that we'll work with in building a large portfolio.
And I assume if you have that equity lined up, and that's great, congratulations, I assume that'll make the debt side that much easier?
I think it'll help on the debt side, because we're going to, with this programmatic equity, we're going to we're going to decrease the amount of leverage that we receive from lenders.
Mm-hmm.
We're also looking at going into a programmatic approach with one or more lenders, and so we won't be basically searching the market for debt. We will have lines of credit. We have had lines of credit in the past, and I think we're pursuing that right now.
How do you find your acquisitions?
Well, the partners, the 4 partners that have been in the business have all been in it for 20 years or more, and so we have really strong relationships that we've built through our careers, and we know a lot of banks, brokers, operators, generally people in the industry. So a lot of it's due to relationships.
Mm-hmm.
Other approaches are, we see the deals that come out through the brokers, whether they're debt brokers or property brokers. So we're very active. We see what's going on in the industry, and if we see something we like, we respond. And our record of closing what we basically decide to buy has been very high.
Very high. Okay, that's good. And you've been in the industry for quite a while. How has the properties that you're seeing today, what's changed from 3 years ago?
I think there's more people have been chasing fewer properties
Today.
I think there's fewer distressed properties. There's more people that want to buy distressed properties. There's more buyers in general. The REITs have certainly changed the paradigm of value. I think values have gone up.
For the big portfolios.
For the big portfolios, and also for the quality properties, I think even for the smaller portfolios.
Mm-hmm.
I think for assisted living and memory care, I think values have gone up for quality properties.
Right. But you're really looking at the onesie twosie type properties, and that the REITs aren't going to compete with you on that because they're looking for much bigger transactions, I would assume. You're not going for the big stuff.
Right. We don't really compete with the REITs and the acquisitions that we do. We're really looking for properties where we can create value, and it appears to me that the REITs are really looking to buy stabilized income streams, and what we want to do is buy properties that aren't stabilized, that there's value-added opportunities, whether they be through renovations or adding additions, or doing whatever the challenge is with the property, and then we take these properties, we stabilize them, and then one of our exit strategies is to sell them to REITs.
Well, if that is going to be one of the plans down the road.
Yes, and we're the portfolio that we've developed, we're getting it ready for sale in 2012.
Really? And then you're going to then go on and expand further with a new relationship with Hunt.
Yes, we're going to continue to build a new portfolio, and with the joint venture with Hunt Realty and Investors, and really build a larger portfolio, and ultimately we'll keep that, and when we get enough mass, we'll probably sell that as well.
Well, do you have a target number, let's say 2012, how many acquisitions you'd like to do? And then second part of the question, with Hunt, do you have a certain size that you want to get to with them?
We basically, we probably want to do, anywhere from 5 to 10 acquisitions a year, depending upon the size. And, we want to build a portfolio, that's larger, north of 20 properties. I don't know what the right number is. We're somewhat a creature of the market. If an opportunity presents itself to sell the portfolio, once we get enough critical mass, we would probably sell it if market conditions are favorable. If they're not favorable, we'd probably hold on to it and increase the mass, and then further, and then sell the portfolio.
Okay. Well, good luck next year, and good luck with your new equity partner. It sounds like you got the platform ready for growth.
Well, thank you, and I think we're ready, and we're out in the marketplace looking for new product.
I'll let people know that.
Thank you.
All right, thanks.